After a year of just incredible highs, the crypto market feels like it's hit a deep freeze. I mean, prices are down, fear is way up, and pretty much everyone is asking the same exact question. Is this just a healthy correction, or is this the start of another crypto winter? Welcome to Crypto Today Simply. Today is December 26, 2025, and we're going to break down what is really going on.
So, if you're feeling a bit of whiplash from the market's mood swings lately, you are definitely not alone. 2025 has been a wild ride. But this sudden drop has a lot of people wondering, is the party officially over? That is the core question we are tackling today.
Okay, first things first, let's get a really clear picture of the current market. We're calling this our holiday cooldown snapshot because, well, things have definitely chilled out. Let's take a look at the key players.
Right, so as you can see, Bitcoin is in a clear correction. It's bouncing between roughly $75,000 and $88,000. Ethereum, on the other hand, is consolidating. That basically means it's trading sideways, holding pretty steady around 2,500. Now, what's really crucial to remember is that holiday trading volume is super low, which can make these price swings feel way more dramatic than they might actually be.
And to put this correction into perspective for you, Bitcoin has dropped roughly 30% from its peak of around $126,000 back in October. A drop that steep, yeah, that's enough to make even the most seasoned investors a little bit nervous.
Okay, so the price action looks pretty scary, I get it, but it's only half the story. To really understand if this is just a temporary dip or a bigger, long-term trend, we need to look beyond the price and dig into the fundamentals. You know, the actual technology that gives these assets their real value.
And what we're seeing are two totally different stories driving the market. On one side, you've got Bitcoin, which is being seen more and more as digital gold by large institutions. And on the other side, you have Ethereum, whose value really comes from its utility. It's the engine for decentralized finance and all those apps.
And let's just zoom in on Ethereum's fundamentals for a second, because they are incredibly strong right now. Recent upgrades have absolutely slashed transaction fees down to just 16 cents, and the network is handling a record 1.9 million transactions every single day. The tech has literally never been more powerful, which creates this fascinating disconnect with its current price, doesn't it?
Now, from a technical standpoint, indicators like the RSI are suggesting Bitcoin is oversold. So, in simple terms, this just means the selling pressure might be getting exhausted. You know, after such a big drop, the bears might just be running out of steam, which often sets the stage for a price bounce.
Okay, let's shift gears now from the technicals to the psychology of the market. Because what investors feel is often just as important as the raw data. Are they scared, or are they seeing a massive buying opportunity?
Well, unsurprisingly, the general mood is fear. The Fear and Greed Index shows that retail investors are really nervous. That feeling that the easy money train of 2025 has left the station, yeah, that's a very real feeling for a lot of people right now. But, and this is a huge but, here's the crucial contrast. While all the retail investors are getting fearful, the smart money seems completely unfazed. On-chain data, which lets us track blockchain activity, shows that the biggest investors, the whales, are not panic selling. In fact, it looks like they're holding or even slowly accumulating during this dip. They are playing the long game.
And speaking of contrarian signals, there's a famous, or maybe infamous, one that just flashed this week. On Christmas Eve, CNBC's Jim Cramer reportedly went 100% bearish on Bitcoin. Now, for a certain type of trader out there, that's considered one of the strongest buy signals you could possibly get.
Okay, so we've covered the what and the why. Now, for the most important part. What do you actually do about it? Let's build a solid game plan for navigating these pretty uncertain times as we head into 2026.
A balanced approach could look something like this. Maybe 40% in Bitcoin as your long-term store of value, 20% in Ethereum as your bet on technology. A crucial 30% in stablecoins, that's your dry powder to buy the dips. And then a small 10% slice for some higher-risk, speculative plays.
But look, regardless of your specific allocation, these 3 risk management rules are totally non-negotiable in this market. 1. Keep that dry powder ready. 2. Keep any new trade sizes small, risking only 1 to 2% of your total capital. And 3, and this is the most important one, always use a stop loss to protect yourself from big losses.
To make this even more actionable, here are some key price levels you might want to watch. For Bitcoin, a stop loss around $69,000 is critical to protect your downside. On a bounce, maybe taking some profit around $95,000 could be a smart move. And for Ethereum, the key levels to watch are a stop loss at $2,200 and a take profit target of $2,900.
Now, before we wrap up, it is absolutely essential to state this clearly.
Remember, these are probabilities, not guarantees. This is just a framework for managing risk in a volatile market. It is not a crystal ball.
So, as we close out 2025, the stage is set for a really fascinating 2026. Is the market going to be driven by Bitcoin's adoption as institutional digital gold or by Ethereum's booming technological utility? That, right there, is the big question for the year ahead. If you want daily crypto market reports and tips for trading, subscribe to Trade Compass and turn on the notifications or hit the bell.